About half of your business is supposed to come from past clients, but those past clients refied down to 3% years ago, so you quietly cross them off your list. Well, today's guest says the low rate is the exact reason to call them, and he will walk you through 3 programs most homeowners have no idea about. Stay tuned.
This episode of Keeping It Real is brought to you by Real Geeks. How many homes are you going to sell this year? Do you have the right tools? Is your website turning soft leads into interested buyers? Are you spending money on leads that aren't converting? Well, Real Geeks is your solution. Find out why agents across the country choose Real Geeks as their technology partner. Real Geeks was created by an agent for agents. They pride themselves on delivering a sales and marketing solution so that you can easily generate more business. Their agent websites are fast and built for lead conversion with a smooth search experience for your visitors. Real Geeks also includes an easy-to-use agent CRM. So once a lead signs up on your website, you can track their interest and have great follow-up conversations. Real Geeks is loaded with a ton of marketing tools to nurture your leads and increase brand awareness. Visit realgeeks.com/keepingitrealpod and find out why realtors come to Real Geeks to generate more business. Again, visit realgeeks.com/keepingitrealpod. And now, onto our show. Today's episode is brought to you by Corded.io. Are you looking for agents to join your brokerage or team? Now, as a real estate recruiter, I can tell you the answer is always yes. But most agents aren't looking to move right now. So how do you know who to contact? Well, what if I were to tell you there's a recruiting and retention tool powered by artificial intelligence that shows you exactly which agents in your local market are looking to leave their brokerage right now and which agents at your own firm are also looking to leave you? Now, I've been recruiting realtors for 15 years and I've hired over 2,000 agents. I can tell you with no exaggeration, this is the tool I've been waiting for. Corded's AI looks for trends across dozens of variables for each agent in your market and shows you which agents they believe are likely to move. Not only does it do that, but Corded's AI went and visited my recruiting website and read everything I offer. So now when I'm recruiting, Corded's AI tells me exactly what to say based on that agent's needs and what my brokerage can offer. It even writes emails for me. I've never seen anything like it, and I use it every single day. Now, if you are looking to grow your brokerage, Corded.io is the best tool out there. Visit Corded.io to schedule a demo. Again, that's Corded.io. And now, onto the show.
Hello and welcome to another episode of Keeping It Real, the largest podcast made by real estate agents and for real estate agents. My name is DJ Paris. I am your guide and host through the show. And today is our monthly series with our favorite lender, Austin Clarence. So we are going to tell you more about Austin. If you haven't yet worked with him, please consider working with him for all of your next transactions. Let me tell you more about him specifically. So Austin is a top producing mortgage loan officer and investor financing specialist, offering loans through Nexa Mortgage, the largest mortgage brokerage platform in the United States. He leverages over 280 wholesale lenders. So what this means is when you have a buyer and he can shop around dozens and dozens and dozens of times to get you the best possible situation for your client. So he structures everything. He has access to almost 300 of these lenders, and he can do really advanced investor strategies as well, including DSCR, short-term rental financing, construction DSCR, 15% down investment property programs. Austin is also known for solving complex financial scenarios that traditional retail banks often decline. He works closely with real estate agents and investors to help them get more offers accepted, close more deals, and of course, grow their real estate portfolio strategically. Through his Learn with a Lender series here on Keeping It Real, he delivers practical, up-to-date lending insights that agents can immediately apply in today's market. Please follow him on Instagram, TikTok, and YouTube, austin.mortgage. We will have links to all of that in the show notes. Austin, welcome back.
DJ, thanks so much for having me again. Look forward to the discussion. Appreciate you.
Yeah, me too. So I know there's a statistic that you were found pretty interesting, which is about, it's a crazy statistic. So according to National Association of Realtors, the typical realtor gets about 50% of their business from clients and past referrals.
Yes. Yeah. Now, I saw that stat too that you had brought up earlier, DJ. And I thought that was interesting because I feel like we as loan officers, real estate, we're all working in the same sector. And we always get so excited on finding the next buyer, the next lead, the next prospect. And really, we shouldn't really have to look that far because we have that past client database that we can tap into either for referrals or to get a repetitive transaction from that same borrower or homeowner who you helped in the past. And in this podcast, I think there's a few different points that I think is going to bring to light a lot of really interesting components, channels, ways we can structure options that will allow for that second transaction. That, again, some of these components that we're going to talk about today, DJ, I really didn't know they existed until 5-6 years, maybe halfway through my entire mortgage career, until I was at a company that offered these programs. So if I didn't know they existed, chances are the homeowners didn't know they existed either. So really look forward to this conversation, DJ.
Yeah, a lot of agents are feeling hamstrung in a certain sense because I don't know what the percentage actually is, but I would say I'm guessing 70% of homeowners refied down to 3 to 4% rates back in 2021, 2022, and that's when we started to see that happen. And so you get these golden handcuffs at 3%, and people feel like they don't want to move and now move into a new doubled rate situation. So how do you handle those kind of conversations?
The golden handcuffs. I like that analogy there. And I feel like it's just becoming more and more common because the refinance boom, or people that purchased, right, 2021 is really when rates bottomed out. So that's either when the homeowners purchased their house, or if they purchased before, even better, that means they have more equity and they probably refinance and they're really, really comfortable with that low interest rate and with that payment. These are the people that are going to the dinner parties talking about how they're going to be in the house forever because of that 2 or 3% interest rate. But really, no one falls in love with the mortgage. You fall in love with the house. And really, over time, life changes. Life throws you curveballs. You might have the in-laws move in the house, or you might have more kids, expanding family, working from home, new job. Life throws you curveballs. And I think really this point that we're going to talk about now is really going to impact more homeowners than any other really loan program or situation out there. It's the simple concept of turning your property into a rental property. So there's a few ways you can do this. The most common way that you can do this is if you own the property, after you live in it for 12 months, again, if you have a really low interest rate, low payment, it's probably going to be 3 or 4 or 5 years, even better, because you're going to have that much more equity to tap into. What this looks like, again, simply turning your property into a long-term rental property. Lenders' guidelines have really eased up on this over the years. So you can actually use a lease agreement to help offset your mortgage payment to qualify for that second, third, fourth. You can rinse, repeat, do this as many times as you want and stack up multiple rental properties with this strategy. So again, this is another tactic that we can bring up to our homeowners that feel like they're, like you said, the golden handcuffs of that 2.5%, 2.75% interest rate. So of course, if they do purchase, they're going to take in a new loan with today's market rate, but they're still going to have today's rental income on that property that is the departing residence with that lower mortgage payment. So again, just reaching out to our past clients, letting them know that the lender's guidelines are really have laxed on this topic. It's easier than ever to qualify for that second, third, fourth mortgage. It can seem intimidating having 2 mortgages. Oftentimes we might reach out to our past clients and they remember barely qualifying for that mortgage just a few years back. And they think a second mortgage, there's no way I'd ever qualify for that. Again, with that rental income, because it essentially is paying that mortgage, the lender's going to take that into consideration, and they can, in many cases, completely wipe out that liability of that mortgage payment to allow you to qualify debt to income ratio wise for that next property. I actually did this myself with a former primary residence that I owned. I just renewed the lease last week. Again, there's so many tools out there for this. It's really not that complex. Zillow is free for any homeowner. It's as simple as putting your listing up on Zillow. You have ChatGPT. There's so many resources to get your property up and running. Again, you can do a background check, credit report. You can vet tenants all through Zillow for free. So it really isn't, it can seem a little bit daunting, intimidating. I think this is a good reminder that we can remind our homeowner friends, our past clients, it's really not that complex. You can be a resource for them, which will enable them to buy that second or multiple property.
You got me thinking about my own duplex down, which is a Chicago style home property. Most of our listeners don't know what a duplex down is. So bonus points if you go look that up. But yeah, we have so many of our homeowners are locked into these rates. They think, well, I have to sell this place, but you were talking about renting it out. And I think that is a brilliant strategy. And you just did it yourself. How easy was it for you to do that?
Very simple. There's lease templates you can get out there for free. Again, I have ChatGPT, audit mine, make sure everything's perfect. Oh, I forgot the lead-based paint disclosure. Boom, go ahead and throw that in there. So again, ChatGPT can be free, or there's obviously a paid version, but there's so many resources out there that I think it's a great idea to remind these past clients of these free tools. Zillow has great support. I promise I'm not a Zillow salesman. I've had my property up and running on Zillow every single year. There's where you can get a ton of eyeballs on Zillow as a completely free platform. Again, you can do a background check. You can look at the credit report without paying $1. I think it's a small fee, maybe $20 or so for the actual tenant to apply. Again, nominal fee. You have the peace of mind knowing who's living in your property. If you need help with a lease template, Zillow has that. If you need help collecting rent payments, you can do Venmo, Zelle, and you can even collect that through the Zillow portal, again, completely free of charge. So many resources out there. The concept of being a landlord, it does sound like a lot of work. I promise you it isn't. I promise you that bringing this conversation up with that client who's maybe thinking about buying another property, they're bragging about having that low payment, they feel like they're somewhat handcuffed. Again, life's going to throw you curveballs. You're going to have an expanding family, want to move to a different part of town, get a bigger house. You can keep that mortgage forever if, of course, you purchase a new property, turn that one into a rental. With that rental income, maybe it's enough to kind of soften the blow of having a current mortgage rate, current payment with today's rate, because you're going to have that rental income every single month. In many cases, it's going to be pretty much tax-free. There's so many tax benefits out there with rental income. A good portion of the time, it can be completely tax-free with depreciation, taking all those write-offs you have under your Schedule E when you do your taxes.
Yeah, I see a lot of agents hearing this and going to their clients who own and have these low rates and saying, hey, have you ever considered renting out your home on your next purchase? Which again is probably a no. The answer is probably no. And that's a great conversation starter. So amazing. I love that. So the next time an agent's about to write off a past client because they got a great rate, that's actually the opening line for a phone call. And Austin just gave you some great pointers there and strategies. I want to talk a little bit about bridge loans. I'm not as skilled in bridge loans, so let's get me and the audience up to speed.
For sure. And the solution that a bridge loan solves, DJ, it's very simple. You own a property, you want to purchase another property, but how does this work? You're living in the house, you really want to live in it while you put it up for market. No one wants to see the baby pictures with grandma on the fridge while they're giving tours of the property. So what a bridge loan allows you to do is tap into the equity you have in your property and use that to have a down payment placed on the property that you're looking to purchase in. Of course, most lenders are going to cap you out around like 75, typically 80% of that property's value. So let's say your property is worth 600 grand and you owe about 300 grand. You're probably going to have roughly about $200,000, roughly give or take, that you can tap into to pay off any debt you have, those credit cards maybe eating away at your savings. You can pay off debt with that bridge loan, and you can use it to put down a down payment on that house that you're looking to move into. So again, this is a perfect example, one of those programs that still some loan officers literally don't know how these work, and it's not every lender offers them. So it's really great idea to bring these up to our past clients, let them know if they have any desire to purchase. There's the loan option out there, allows you to purchase first, sell after. Again, there's going to be a small fee for this. Every lender's going to have a different way of having a fee placed on this. It's typically a percentage of the purchase price. It could be interest on the money that you're borrowing, but it typically is a lot cheaper than selling your property while living in it, having it sit on the market, having to live in the property after you sell the house. Again, these are things that probably every realtor in here is cringing at. And that's what that bridge loan solves. Allows you to tap into that equity, allows you to get cash for the equity you have in your house. You'll pay that loan back after that house is sold.
Yeah, this also, I see this a lot with people who don't want to deal with contingencies. They just don't want contingencies, but between their homes, right?
Exactly. And I feel like if you find a house you want to put an offer in and it's a newer property, like what's the likelihood you're going to take a contingent offer with a 75-day close? No one's going to want to have to wait that long to see if your property sells. There's so many ifs that could come up, and that if is really costing you money. And that's what that bridge loan does. It eliminates the if, eliminates the need for any contingency. Simply trade some of that equity you've been making your payments each month. You've been accruing equity through appreciation, especially if you've owned your property for several years. That bridge loan essentially trades that equity for cash to put down on a new house without having any contingency. If you have, let's say, a mortgage on that property, which I'm sure pretty much everyone's going to have unless they happen to pay it off in 4 years, the bridge loan will actually allow the lender to qualify for you that house without having to take into account that mortgage payment into the DTI ratio. So again, they don't really care what your current payment is. They're only looking at that future mortgage payment because they know that loan's going to be paid off. So it eliminates any concerns you might have with debt to income ratio. That's typically the biggest concern or biggest disqualifier that a homeowner might come up in their head. The bridge loan allows the lender to ignore that current mortgage payment, tap into all that equity so they can pay off any bills, credit cards, student loans, and of course, put a down payment on the house that they're looking to purchase in without any contingency. Again, this is one of those programs that really there's been a ton of traction on this over the past 2 to 3 years. More and more lenders now are offering this. I think we have about 30 different lenders who offer some different variation of a bridge loan. They're all pretty similar, different fees, structures. You typically have to sell your house within 90 days, 120 days, sometimes 6 months. Again, every lender is going to have their own kind of nuanced details to their own guidelines. So if you feel like your property might take longer to sell, then of course you wouldn't want to proceed with someone who's going to have a 90-day clause, or you're going to have to take their guaranteed offer to sell that property for less. So there's so many different flavors of ice cream out there, so many different variations of that bridge loan. This is a great program that really most homeowners simply don't know exists, and we have to remind them that this option is out there to buy before you sell.
Absolutely. It is really amazing to me how many homeowners have 6 figures of equity and mentally treat it like it's locked in a vault. They know it's there. They just don't think they can actually use it.
Exactly. It's like you have that huge bank right above your head, that imaginary money that's not really there, but it's kind of there. It's only there once you realize that, once you liquidate that. And that's what we have to remind our homeowners. So there's a few ways to tap into that imaginary vault, DJ. And of course, that imaginary vault is all that equity that our past clients have by making payments each month, by capitalizing on all the appreciation we saw during the COVID boom, or during maybe some markets right now are still appreciating at a higher rate than other. This is how you can tap into that. And there's really a couple different ways. One option is, of course, simply a cash out refinance. Again, this option is going to be less popular for those borrowers who still have amazing interest rates, but it does allow them to tap into the full amount of equity that they have remaining, typically up to 85% or 80% loan to value.
The cash out refi real quick to us?
Yeah, Yeah, for sure. So there's two different options that our past clients have to tap into equity. A refinance is simply paying off the existing loan you have now with a new loan. It's a larger loan. There's pros and cons to doing that, with the alternative being a HELOC, a home equity line of credit. A HELOC, as a reminder, guys, it's like a credit card you can take out against your house. And why wouldn't you just take out a credit card? Because the interest rate is going to be 3 times higher typically with a credit card, as opposed to a loan that's secured by your property, as opposed to the 20% credit card rates. You can also tap into a lot more cash with a HELOC, or that home equity line of credit. This is another program similar to the bridge that has really exploded over the past 2 to 3 years. There's so many different variations of HELOCs, and it's not going to be a traditional mortgage process of going through appraisal and verifications and all these documents. You just feel like, God, it's like doing your taxes all over again sometimes with some of the banks that offer these programs. Nowadays, there's a streamlined process with HELOCs, and it's as simple as applying with a self credit check, no appraisal. I have a lot of clients that are typically closed between 7 to 10 business days because there is no appraisal, because all the underwriting nowadays is fully automated with some of the AI technology out there. So you can simply link your bank account, link your ADP payroll without having to upload one document to close on these loans. These loans can go all the way up to 90% of that property's value. So let's say you have a property, you have a lot of equity. Nowadays, there's millions of Americans that are struggling with inflation, with higher interest, credit card debt. They want to purchase, but they kind of feel a little bit foolish purchasing, still carrying all this debt. This is the solution for that. You can do a home equity line of credit, pay off any debt that you like, and then you can also use this cash to put money on your down payment. So in a lot of ways, it's pretty similar to a bridge loan, a little bit different, but it has the same intention, right? You're tapping into the equity you have in your property. Oftentimes you can close within a week. So that's a pretty quick turnaround time. That means you can literally see a house you like. You might be able to get approved for the HELOC, get that money into your bank account, and still pursue that property. Obviously, I don't want to guarantee that if it's a new property, it's probably not going to happen. But there's so many solutions out there that our clients are forgetting. They just simply don't know exist. They think they probably are not going to qualify for a HELOC because maybe a bank told them they only go up to 75% loan to value ratio in the past. And nowadays there's programs that let them go up to 90% loan to value of their current property's value.
Yeah, I'm curious with AI. Has AI made the loan process shorter?
It has, and the best way to answer that is it is. It's improving a lot of things, DJ. And I think what we can all remember is, any realtor listen to this, purchase transactions, there's so many moving parts. Everything is kind of fluid with this deadline, the inspection, and adding more seller credits and the guidelines. AI is really not doing a ton on the purchase side of the transaction, because we also know our purchases are the most important kind of financial mortgage transaction there is, because we have our borrowers earnest money deposit at stake. So nowadays, the home equity line of credit options, even some of the refinance options, these are programs that are really becoming more and more AI powered, which is amazing. The purchase side, we're still dealing with human underwriters. That process isn't going to change, but the less crucial transactions, right, like a line of credit, these are programs that are fully automated. The lenders nowadays, instead of using full appraisals, are using AVMs, kind of like a realtor, Zillow. They're going to come up with that AVM value. Every lender has their own little formula and company that they team up with for their AVM value. Again, that AVM is going to dictate how much equity our clients can take out when they do pursue that home equity line of credit option. So yeah, you really couldn't close a mortgage, DJ, in 7 to 10 days with human underwriting, with 2 to 3 day turn times for underwriting. It's really amazing to see. And I think eventually we might see more of this kind of tip over to the purchase side. But for the time being, I think that all these lenders, it's such new technology. They want to get all the kinks out, have it be a perfect process, and then eventually transition more to the purchase side, where we can hopefully one day close a little bit quicker, a little bit sooner, and a little bit more of an efficient process.
Yeah, we can hope for that for sure. And the one thing I wanted to mention is, if you our listeners, if you do not have a preferred lender or you want a backup lender, Austin Clarence would love to talk to you. He is incredible. He comes on our show every single month to very specifically talk about what is going on in the lending world. And he has access to hundreds of opportunities, banks, lending institutions to find the best possible solution for and product for your client. So reach out to him. He is amazing. He comes on and just delivers unbelievable news to us. And so I want to talk about, but back down to finding clients. So some of the best opportunities aren't saying no, they're just not talking. So can we go into that?
Exactly. And I feel like there's so many different past clients. Everyone's in a different position, but we tend to assume that the door has closed, that realistically, if I owe credit card debt and I want to purchase a house, it's not realistic. I have to pay this off and then I'll have to go talk to the lender. They're forgetting that there's programs out there that can pay off all the equity and give them the down payment to put a good sized down payment on that next property. So it's so easy to assume that your options are limited. Maybe you've pulled up a mortgage calculator and looked, okay, how much does that $600K house cost down the street? Oh my goodness, with these payments, I'll never be able to afford that. But you're forgetting that you have an option to receive rental income by turning your property into a rental. Maybe if you have $800, $1,000 a month in rental income, it kind of softens the blow of having that slightly higher mortgage payment. This is why I think it's crucial to stay in front of those past clients. I know we always hear that in the real estate sector, past clients are everything. We have to stay in front of them. But what does that conversation actually look like? What are the options? Where can I take this conversation? And understanding their goals, knowing where to take it. We just talked about someone that wants to purchase before they sell their house. Again, the bridge loan is like that newer program that's gaining a ton of steam. We can bring up the bridge loan option. We can talk about how you can trade equity for cash with the HELOC or with a cash out refinance. You could even take out a HELOC or do cash out refinance to help a family member purchase their house. So if you have a past client, they want to help their family member. I've had multiple clients that have done that over the past year. So they tap in, maybe take 30, 40, 70 grand from the equity they have, and then they use that to gift a down payment to their nephew, to their cousin, brother, friend, neighbor who's looking to purchase real estate. So really, all that equity our clients have is gold, and really it's means to purchase that next house. It's means to help your nephew to receive rental income, to become a real estate investor without having to put down 20% to buy a rental property. It's simply tapping into the equity you have, buying another primary with maybe a 5% down payment, and rinse repeat, turning that property into a mortgage, into a rental property while you purchase another primary residence.
Yeah. I mean, these are the strategies that Austin can help your clients on if they are just starting to become an investor or with their primary residence. So these are amazing. Austin, thank you so much for coming on today and talking about all of these different opportunities for our audience. What's the best way that somebody should reach out to you if they want to get a quote?
You guys can reach out to me whenever through really any means. My cell phone number, if you want to text me, call me, you can always reach me at 650-906-2376. Again, all of my social media is austin.mortgage. So if you go on Instagram or you go on YouTube, you look me up, you comment or shoot me a message. Sometimes it's easier just to find my profile. Shoot me a message of your email. I can add you to my Wednesday newsletter where we go over newer loan programs, strategy, market updates, what exactly is happening in the market today, what the winning strategies that I'm seeing on the buyer side that realtors are executing on. Again, every single Wednesday, we're firing off these emails. We're getting a ton of good feedback so far. So please shoot me an email, aclarence at nexalending.com, or you can reach out to me on social media or through my cell phone number, 650-906-2376. So really, whatever is easier for you. If you guys decide to follow me, please shoot me a message. Say you found us on the podcast. I'm more than happy to add you to my newsletter that I fire off again every Wednesday midday. So appreciate you guys.
Yeah. And follow him on Instagram, TikTok, and YouTube, austin.mortgage. He is our Keeping It Real official lender. We love Austin. We love you, Austin. And hey, we will see everybody on the next episode. But before you go, remember, on your next lender, get a backup offer and reach out to Austin. On behalf of our audience, Austin, we say thank you. On behalf of Austin and myself to the audience, we also say thank you. And remember, the best way that you can help us grow is by telling a friend. Think of one other person in your brokerage that needs to hear this episode and shoot them a link over to it. And we appreciate that. Also, leave us a review wherever you are listening to us on. We appreciate all the comments, and we will see everybody next time. Thanks, Austin.
Thank you for having me, DJ. Appreciate you. See you in the next one.